I think it's kind of funny to me that every other video nowadays is about the recession, how do you outlive the recession, what do you avoid in the recession. It reminds me of a time where I accidentally invested in a penny stock pharma company. I mean, I invested it on purpose, but I accidentally doubled my money. It was a really stupid company, but I was playing the pharma game because I didn't have much and I was looking to flip my money. Thankfully, it worked out. And even though it was a really stupid investment, looking back, it gave me enough bankroll to continue this journey and reach final financial freedom. But it gives me a great idea to do this video. We're actually going to talk about what industries you might want to consider during the recession period and what industries to avoid. Some of these companies, they kind of fall in between the zones. So even if these industries are obvious to you, we're going to give you a little bit of additional factoids to keep you entertained and informed as well. So without further ado, if this is the type of content you've been looking for, please hit the like button and let's get started. The number one suggestion, especially if you're looking for big gains and big risks, I recommend pharma. When I invested in pharma and doubled my money, not only did I do this on a shitty stock, I did it during the last economic downturn. If you actually do a little bit more research like I did after the fact, pharmaceutical companies are relatively immune to the recessions because ultimately we need drugs. Sick people, they still need innovation on medicine. The governments are going to continue to fund it. The private sectors continue to fund it because when a drug becomes FDA approved and it gets picked up by the insurance companies, the gains are astronomical, especially when we're talking about investing in them during the late stages. It's really, really hard for a company that has 20 years worth of research to get funding cut. That's why I highly recommend you play the pharma game during and right before the recession. If you're looking for less risk, pharma is a great investment as well. What you would do is invest in the bigger companies, the ones that are big enough to pay dividends. That way, worst case scenario, the stock's not going to go anywhere and you're going to make your dividend. If the pharma game is too exciting for you or it's a little bit too knowledge driven and you don't want to touch that field, I recommend you looking into the home essentials, food and beverages, and the essential services industry. Unless a war breaks out, those things are just going to have to be bought. We're talking about Costco, we're talking about Walmart, Target, we're talking about Intuit because everyone's got to pay their taxes. And actually, I think there might be an interesting play around Home Depot as well because I have a hypothesis that people are going to stop paying for the expensive contractors and they're going to start doing DIY projects. And that's where Home Depot comes in. Along the same lines, whether we're talking about professional construction or personal yard related construction, or we're talking about, the new business around cannabis, buying dirt might be a really, really interesting investment right now. If you just do a quick Google on Amazon for soil, Scott's Miracle-Gro, either Scott or Miracle-Gro brands, they show up in like the first 6 results. They have incredible product fit and brand awareness. So that is why I also recommend them as a recession bet. You only have to buy dirt so often, right? So if you're going to buy dirt, you might as well buy a brand that you know, right? The third industry is slightly debatable, but I think it's worth mentioning. If you talk to people in B school or, the professors in B school, a lot of times they'll talk about, how business work, how to find a key market, and then they'll throw in something along the lines of, but luxury markets, they're on its own wheel. It's unpredictable. Don't touch it. Don't listen to the advices the same way. And I think it's true. Rich people, regardless of whether there's a recession or not, they'll have less money, but they'll still have way more money than us. So it behooves us to invest in luxury brand products if that's the game that we want to play. You got to find brands whose user segment is not the upper middle class. We're talking about people who have fuck you money. And this is Ferrari. We're talking about Coach. Coach itself is not a luxury brand. It's like upper middle class for sure. But it owns a ton of really, really seriously luxury brands. Estee Lauder might be a good one. Hugo Boss might be a good one. So on and so forth. Now let's talk about the semi-bad. Most people will tell you to avoid the entertainment industry. I actually think that there's an in-between here. Because the way I'm looking at it is that you might think it's ridiculous to spend $16 on 2 movie tickets for one movie in a theater. There's a lot of time investment, upfront cost, and it's only 2-3 hours, whatever, how long the movie is. But if you spend that money on the Netflix account, then for about the same amount of money, you have a month's worth of movie you can stream. Same thing about Disney Plus, right? We can talk about, Hulu, there's a shit ton of other brands here. My point is that entertainment as a sector might go down, But my hypothesis is that digital streaming as an entertainment will go up. People will look for alternative options for valuable entertainment, things that take their mind off of their hardship and their financial situation. They're going to jump into places like Netflix. Similarly, I think children's entertainment will be a great investment as well. Not necessarily in physical goods like toys, but digital entertainment. We're actually going to talk about that in the next video, but keep in mind, me being an optimist at heart, we're going to talk about the second industry that you should technically avoid, but there might still be some winners here. And this is the retail space. So, if you think about it, people who have money, they're going to spend the money on the upper end, right? People who don't have money, or people who did but now needs to tighten their bootstrings or tighten their belts, now they're going to spend their money in Target, Walmart, Costco, etc. Everybody in between, I think they're going to get humongously fucked. And this to me means Macy's, Nordstrom, Dave & Buster's maybe. We're talking about even perhaps Gap, because I don't know. Because is Gap even a cool brand anymore? Their Banana Republic, their Gap itself, Old Navy. I guess Old Navy is somewhat affordable, but the other two, they're not cheap. And they're not cool. And they're not essential. So I'm not really sure if Gap is going to be a great business during a recession. The last industry that we should all stay away from is automotives. And frankly, even if we weren't going into a recession, I would tell you the same thing. Because other than Tesla, I don't think any of these companies are innovating. Yes, they're adding new technology, but they're not innovating in the sense that they're not leading the pack like Tesla is. They're just integrating whatever technology is coming onto the market. They're not creating the innovation, creating the new idea like Tesla is. In a product-focused investment strategy, that is absolutely shit. On a side note, whoever comes up with the first dependable automated driving vehicle, regardless of whether it's Google or a legitimate manufacturer or Tesla, I think they're going to own the business. I think they're going to own the entire automotive business in a huge, huge way. On top of that, during a recession, because car qualities are so much higher thanks to Japan and Germany, people are not going to need to swap cars. People are going to buy less cars. And that actually happened in the last recession as well, right? So we're fully aware of this historical pattern, so therefore I highly recommend that you avoid it. Alright, short and sweet guys. I hope this video proved helpful. As always, I always share with you content and strategies and research that I use personally for my own investments. I will never share with you something just for the sake of clickbait, and I hope you can appreciate that. If you like the content, please leave a like and subscribe. If you have any questions or concerns, please leave a comment so we can open a dialogue. Otherwise, thanks for watching, and I look forward to working with you next time.